Hey, what's going on, everybody? It's John here. I do videos on investing, on generating income online, on credit, and then also you're going to see some videos on adventure travel, and then also starting to do a lot more content on short-term and medium-term furnished rentals because we are slipping right into the busy season. I've got pretty much my whole summer booked out at one of my places. But basically, today I got to hop in kind of quickly here. I want to show you my browser. I want to show you some performance. I'm going to kind of show you a couple different. I'm going to show you a couple different scenarios of performance. I mean, basically, I have another YouTube video where, I show performance from like, I think July or August of 17 until July or August of 2020, or maybe even the end of September. And I show you how I actually beat the S&P 500 by 3x. I want to go there again to show you, but what's happened is this year's been, I really haven't done too much trading, at all. I've been really just kind of focused on selling Amazon at the right time, but it's got to be the right time, and Amazon hasn't really moved much at all since September, really. I haven't really done much trading. I mean, I've added a few positions, very minor, kind of as I dollar cost average into some of these positions that I like, even with margin. But I've been aiming to reduce my margin with Amazon, and it's Amazon has not moved except for when they did their earnings. But I want to hop in and show you some of my performance because even though I haven't done much, it's still really good. I would say the concept of the fact that I focus on kind of growth technology and let's just say kind of hyper growth companies. Even though it's been pretty bad, it's been pretty much like a scenario of let's say like one step forward and three steps back, or three steps forward and one step back, kind of thing, kind of scenario since middle of February. But what I want to do is I want to show you kind of how it looks still from May of 2020 to May of 2021 relative to the S&P, and then also, yeah, just some other ways to kind of show you. And again, I'm tracking against the S&P 500 TR, which is the technology index, which actually performs has a higher performance than even just the S&P 500. So let's hop in real quick so I can show you some of these performance figures. Okay, so the reason I'm showing you this is just really, the percentages compared to each other, right? I'm not really. This is just one brokerage account. I mean, this is Merrill Lynch, and they've got a really nifty performance figure. I didn't really add to it. I don't know why it's showing that, but anyway, it's not really about the figure. It's not really about the dollars. It's about the actual percentage, right? And what happened was, being in real estate, I pretty much hold on to my properties, but at the same time, I mean, sometimes there'll be an opportunity to, invest and then sell, as a partner or something like that. And I did have a situation where there was an exit in summer 2017, and that was, and then even that though, I still dollar cost averaged, from let's say June, and then fully, was then fully invested in my, high conviction positions in the end of August, right, of 17. So you say in that 3 years, basically the time weighted return for my positions that I picked is 193.78, and then the S&P 500 TR, the technology index, was 50. So that's almost 4x, right? So 193.78 divided by 50.63. Yeah, 3.827. So, I mean, basically it's almost 4x. Now, if you take it and you look at, I think what, people might find a little bit more, telling is 2020. And the reality is that, yeah, I mean, 2020 was great for stock investing, right? And certainly into, the end of December, but there was a huge, massive hiccup in March and even early April. Things, really turned around, and I'd say mid to end of April of 2020. But basically, even there, for the full year 2020, it's still, really high. I mean, that's a little bit over the top. I mean, that's about almost 7x compared to what the actual S&P 500 was during that time frame. But what I'm bringing up is the fact that growth technology and even my positions have really not done much at all, right, since the middle of February until the end of March. And April was good for pretty much almost everything, but then May, here we are, it's Tuesday, May 25th, And May has been a sucky month for growth technology, and then even a lot of stocks, but just really I guess my positions, right? So if you take a look at May of 2020 till May of 2021, I'm still over 2x compared to the SP 500 technology index, right? That's the benchmark index that I use. And again, the S&P 500 technology index is actually a higher performer than just the standard SP 500, right? So still almost 2.5x, from May to May. So, the point of all that is just to kind of show you that really the concept that you just got to stay in, right? You got to stay in, and you got to make, I make, very calculated decisions with my calculator in terms of my percentage exposure at all times. When I'm going to exit something, when I'm going to enter something, and it's always very, very calculated. I'm always dollar cost averaging in, and I'm always dollar cost averaging out. I've got high conviction names that I want to go into, and I've got, certainly high conviction names that I want to exit. Like for me, I really want to, not completely exit, but I really want to reduce my exposure big time with respect to Amazon. I haven't touched Apple. Apple's the next one that I want to kind of, reduce some of my exposure to, but it's kind of hard because they've just done so well. But at the same time, I mean, how are they going to, go up from here at almost 2.5 trillion market cap, which their market cap is actually lower now at this point because they have really not done much in a long time. They're at 2.118 trillion, but if you look at their 52-week high, it's pretty close to 2.5 trillion. So I'm still undecided. I am envisioning that Apple's going to be my next position where I'm going to reduce some exposure after Amazon, but I'm like really, really chomping at the bit, with Amazon. But it's a little tough because, their shares are like $3,500 a share. So, you kind of have to be fairly strategic in how, you sell that share. And then for me in Amazon, I'm almost at a 10x return because I've purchased Amazon along the way, certainly, but my first purchase, in the last decade, my first purchase with Amazon was in 2014 when their stock was down almost $100 in one day, and that particular position is almost a 10x, on that. So I'm gonna try to wait until I can actually click that, either do a market order at the 3600. Or like a limit order at the 3600, and it just kind of leave it there. I actually did have a limit order at 3600 for a while, and then it started to kind of creep up, so I reduced it because I thought maybe it would go above that, but it didn't. But anyway, that's just a quick glimpse into my performance. I know I talk a lot about investing, and I'll talk about different things related to investing, and I want to just kind of provide y'all just like a little bit of proof there that that's just really one brokerage account. It's Merrill Lynch. Yeah, so that's just some of my picks. I'm not really kind of going into all the different picks I have, even though I did add quite a few picks during the second half of 2020, which were basically I was already in Tesla, but I added Shopify. Actually, I think I was already in Shopify. I added Etsy. I added DocuSign. I added Peloton. I added PayPal, and I think those are the ones that I added. And pretty much of all those, interestingly enough, Shopify and Roku were the biggest winners. I've had Roku for a while, and I've been continually increasing my position as time has gone on with Roku, and that is probably my highest conviction name at this point. But hopefully you guys like that. If you want to see more with respect to the performance that I'm talking about, let me know in the comments area. If you want to hear some of my videos about investing, I also do videos on credit and then also generating income online. I don't have a lot of content on generating income online just yet because it's kind of complicated. And even now I'm going to be getting into doing more content on the short and medium term furnished rentals, because that's really not that complicated, but it is a lot of details that I like to cover. But if you want more content, let me know in the comments area. And if you like this, if you want to hear, I do a lot of, earnings reports, like the quarterly reports. I've got, my stocks, I call it the handy dandy spreadsheet, where I track them. I track their revenue. I track their gross profit. figures. I track their gross profit margins. I track total market cap. I have a ratio where I divide the gross profit, annual gross profits into their market cap, so I can kind of stack them up against their peer group. And I also look at year-over-year revenue growth, and I'm tracking every group to see if I can pick up a new position around the time that company hits $1 billion in sales. The whole goal is to really focus on the hypergrowth companies, because that's where I have really just developed my sweet spot. I mean, I invested in the in Apple back in June of 2007, right before the first iPhone came out, and that particular investment has got about a 33x return. Now, keep in mind, I did sell a lot of that Apple since 2007, but I still do have some of those original purchases from back then, because it's really important to me to I'll hold on to my losers, even if it's just like one share I'll hold on to. So there you go. Hopefully you guys like that. I'm going to put some links in below. Everybody, also, I came up with a blueprint last year, and I updated this year as well. I cover investing, generating income online, credit, and then also at the very end, I got a guide where I have all the groups in the U.S. that give you a free FICO score or a free credit score, plus then all the groups where you can get a free FICO score from all three bureaus. The reason is because if you're going out there using credit, which is pretty much everybody in our country, you have to know what your FICO score is at all three bureaus at all times, and that's because 90% of all lenders use FICO as their scoring model, and also what they're going to do is they're going to use a bureau that you're not sure which one they're using, or they're going to use the medium of the three. So you have to know what your score is at all three at all times. Anyway, so that blueprint is only $7, and I have a lot of investing content in there as well. All right, thank you, and have a great week.